He did it. He really did it.
Yeah, one thing I want people to like recognize is that you can read the market with relative accuracy, right? You don't have to be able to predict what's happening in a day. You just need to be able to read the market for that day, right? So this is Friday, 1:30, and all of these ranges, I'm not making these up as I go along. These ranges are from months ago. So if I go to the 4 hour, you'll see that they stretch back for like ever. Actually need to bring this one across. I didn't even notice that was all the way over there. Do 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 do. All right, so look at that. All these points hit with relative accuracy. And all I'm doing is just moving my zones across. You see all these lines or whatever. As you reduce the time, there's slightly less lines all the way down to the 1 minute. So even when I'm trading on my 1 minute time frame, I can still see when we hit every single level. So we came through the low, we hit the level, and you'll notice like we'll be down and touching these blue lines all the time, but they're really just the bodies of the candles. You get the little manipulations and stuff here and there, you get the push downs for here and there, but all I have to do is take my trades within these zones, and they're going to give me $15 on average, right? $10 to $15. So you got $10 here, $12 there, or $10 there. So on average, these zones are giving me $10 to $15. So if I'm just trading inside of the zones, it's paying off. So literally, you'll see breaks above the line right here. We're touching it, we're touching it, we're touching it, we're touching it. Just opportunity after opportunity to take trades in this particular zone. Beautiful trade right here at 3 o'clock in the afternoon where we touched it, went below the 200 EMA on the 1 minute, touched it, and then ran up for from 32 to 52, so $20. Super duper easy reading, nothing crazy. $20 play right there. Just touched my zone, it wicked through the 200 EMA, and then you know your zone's valid because it'll just keep touching. It won't break through most of the time. It won't, like, it's not gonna go all the way up, fall all the way down all the time like you see here. When you're seeing this, you're seeing that you're already within the top part of the zone, and it's reversing to where usually the 200 EMA, but then it settles, look, right there in the next zone. Isn't that crazy? It settles right in the support where this used to be resistance becomes support, and then pushed up even higher. So then you can take it from there for 41 all the way up to 56, another $15 worth of trading. And then even here, I took, like, my last trade was on the pullback right here, and then I took another trade later in the afternoon at like 4:30 right here. As soon as we touch the zone again, basically just setting up trades and letting them play out as they play out. But as soon as we touch the zone, and then I got out at this line right here. So I wasn't expecting anything with $3, but if you understand what to expect, you can adjust your entries accordingly. So like, it doesn't matter how many contracts I use. I can use maximum contracts, I can use minimum contracts and get massive plays, or I can use maximum contracts on small plays, because I'm very confident in the analysis. I'm very confident that we're not going to run up to here, but I'll still protect myself over it. But I'm very confident that we're not going to go any higher. So when you can be confident that something's probably not going to happen, then you'll be able to take more aggressive trades. And all of this is just understanding your zones. And like, I leave these lines on my screen at all times because in the future, we're always going to come back to a point. No matter what, how many trading days goes by, no matter how high the market gets, we'll always return to previous lows and previous highs. You know, not all the way, like, we're not going to fall to like $200, $300. That would be like the stock market crashing. But as you're climbing up and you're adjusting all of these up, if I go on the daily, these are on my daily. So this used to be way over here. I moved it over here, and then I adjusted it up to the bottom of that, which puts me at the bottom of this candle here. So we haven't covered these last couple things right here. If we ever fall down to like really low, then we'll hit that, you know. But look on the way up here. On the way up, this is the daily. You see how we climb, we come back and meet an area, we go higher. We climb, we come back and meet an area right here, we go higher. We fall a little bit sometimes we fall a lot, but all we're doing is coming back and meeting this area here. And then after you get that massive fall, you get a gigantic push up. When you get a massive fall, you're usually going to get like a decent push up off of that. And, you know, so now where we can go to is we can always come all the way back down here. Because we haven't covered this area yet, we can always come back down to fill this gap right here on the daily. So if we ever do fall, note that as like an area. I'll go ahead and put a notification here for me to get in if that ever falls down there. But yeah, we can all, and then the first place that we would come back to is this little 48 area, 49.59 to 50.02, and we came to 51.19. And I just leave these and adjust them as time goes on. And as the stock moves up and up and up, I adjust it to the new level. And then it moves up further, I adjust to the new level. So this was resistance. It's now support. We came down through the support on Monday, but all we did was touch off the 200 EMA on the daily. Then on the weekly, same thing. Same thing. You know, when we finally fall, if we fall, it'll probably be to like this area right here, this 47.61. And then, you know, you'll have the brand new market where it'll continue to run up. But the most likely area is the 49.94 area, 49.53 that we hit on the 15th. But we can still, you know, there's still plenty of room to come down. So what happens is usually this time of the year in September, it slows down a bit and starts to fall. But we got a big boy coming up with Nvidia's earnings that could completely change the trajectory of the market. You know, if they hit and things go very bullish, especially with the rates being dropped in the next month or whatever, we could see a breakout of the SPY trying to go for 570 and stuff like that. But that's it. You know, once you can accurately read the market and check these levels and see these levels, I'll say this is just my opinion, of course, but I feel like using indicators slows your progress as a trader, right? So I only use one indicator, and it's the 200 EMA. And the reason that I use the 200 EMA is because it acts as a hard level of support or a demand zone, or a hard level of resistance or a supply zone if we're going up. If we're going up, it's resistance, so it's a supply zone. It's a resistance here, it's a supply zone. Same thing. As we're going down, it's your support. I'm sorry, as we're going up, it's your support. As we're going down, it's your supply zone. So, and because it hits so frequently and bounces off of it so frequently, it offers me like a ton of great trades, but it's really the only indicator I use. I don't use any other cheat sheets. I just train myself to see what's going on in the market, and it's been much more helpful than trying to use an aid. By using an aid, I'm slowing my own progress as a reader, and that's all you are in the stock market, is you're a reader. If you read a book, you read it from left to right all the time, right? Nobody reads a book backwards. But the more you read, the better you get at it. You know, if you ever experienced that, if you were like a reader in your youth, when you used to struggle and stutter and, you know, you couldn't understand certain things, but the more time you spent with it, the better you got at it. It's the exact same thing. And some people get really good at reading and they love reading all the time. I don't love reading all the time, but I do read the stock market all the time. So that's my book, you know, and I've been reading it for over a year now. But if I was to show you what I have, everything's off. Everything's off. All I have is this balance detector because it's I don't look for fair value gaps, and it just shows me where the fair value gaps are and stuff, and where the imbalances were left behind. So that helps me with that, because I don't personally look for fair value gaps and stuff when I'm trading. I'm not looking to trade out of that. And then my ATR trailing stop I turned off. I have a 9 EMA, a 23 EMA, and a 200 EMA. The 9 EMA really just confirms, and the 23 really just confirm the trend. You know, when they switch, what trend we're going in and stuff like that. So I'm not really using them to trade. I don't trade off of them at all. I only trade off of the 200 because it's the one that offers the most accuracy. The 9 and the 23 don't actually offer much accuracy. They just tell you the trend. But that's it. You guys have a happy weekend. I'm about to go get my haircut. Check you guys out later. And then once you learn how to read your zones, and once you learn how to read your ranges, if you focus more on taking trades off of the top and bottoms of the ranges, because like, all right, even think of it like this. Like, it's not like I'm not trading in the middle, right? Technically, It can be consolidation, it can be the middle. But because I know the range, I'm not taking these trades in the middle. These trades are the trades that tear you up. I'm waiting for it to get to the top of a zone, take it to the bottom of a zone, get to the bottom of a zone, take it to the top of the zone again. So I'm saving myself the headache, and if it doesn't hit the top of the zone, then I'm not taking one to the downside. That also lets me know that I should be taking my trades from the bottom up. You know, that's another way that I'm reading it as well. But the longer video is processing right now. I'll put it up in a second.